Hello, how are you? How are you? Yes, it's another great day to be a Bitcoiner. Welcome. Welcome to another live impromptu Q&A session with Oliver Velez, of course. My name is Oliver Velez, and what am I trying to do here? I'm trying to be your voice in the wilderness. Not quite sure we can characterize things out there as being a wilderness now. No, I wouldn't say it's a wilderness now. I would say that we are in what I would consider to be the second phase of Bitcoin's existence, its life. I believe that its first 15 years, in my opinion, represents phase one of Bitcoin's evolution. And that we have entered, as of January, phase two. The catalyst for that, obviously, is the approval of the spot Bitcoin ETFs. We are entering into a phase in Bitcoin's life in which it will have things that it's never had before. And I think it's important that we know what these things are. Number one, guys. Welcome, guys. Number one, Bitcoin has never had institutional sponsorship. Now, I know that during certain parts of Bitcoin's initial 15-year period, it wasn't that there were not any institutions playing in the space or playing around with Bitcoin or even had Bitcoin. No, there were. But what I am talking about institutional sponsorship is basically the item has never really had enough regulatory clarity, nor was Bitcoin really positioned inside of the traditional financial space and on its rails in a way that it is becoming to be so now. So Bitcoin's never really had institutional sponsorship or the potential to have institutional sponsorship. Basically this year, Bitcoin has never had true regulatory clarity. Now, in 2014, Bitcoin was designated as a commodity, not a currency. So it's property, a commodity that was in the United States officially designated Bitcoin as a commodity. That is a small portion of regulatory clarity, but there was still a lot of questions around that. Obviously, the approval of the spot Bitcoin ETFs have brought about a lot of regulatory clarity. It is now packaged in something, in a financial product. So Bitcoin is wrapped in a financial product called a spot Bitcoin ETF that has all the regulatory clarity it needs. And so this era brings about institutional sponsorship, this second era, which the first era did not have. It brings about pure, clear regulatory clarity, which the first phase of Bitcoin did not have, but this new phase does have. We also did not have clear, fair accounting rules applied to anyone who wanted to adopt it in the business world. And so FASB finally came to the rescue in that regard, has, for the most part, made it clear what the accounting rules, they've changed the accounting rules around Bitcoin to be a lot more favorable to use Bitcoin as a treasury asset on your balance sheet. The accounting rules were very, very punitive prior in phase one, but in phase two, which started this year, the FASB rules make holding Bitcoin as a reserve asset for miners and companies like MicroStrategy that want to follow a model of at least having a portion of their treasury hold Bitcoin is now very, very favorable. While that law that FASB rule change, I should say, is not in full effect until January 1st of 2025. Companies that are really in the business of doing this and really want to do this year do have permission. They do have the ability to seek permission for early acceptance or early adoption or use of the new FASB accounting rules this year. So for all practical purposes, the rules are in place as of this year, although officially 2025. So Bitcoin never had those favorable FASB rule changes in phase one. It has the FASB rule changes in phase two. Bitcoin's never had a permanent and constant institutional bid in the market. And this is what the ETFs have brought about, meaning that the main purpose of a spot Bitcoin ETF is to constantly buy the asset, to basically be a net buyer. That's what their main purpose, their whole existence is designed around buying and holding the asset. Now, a lot of people say, well, Oliver, they're also sellers as well. Yeah, but not so much. Not so much. I believe, Bitcoiners, that the spot Bitcoin ETFs, I could be wrong, but this is my view. Bitcoin is one of the most scarce assets on planet Earth. It's disappearing at an alarming rate. These people know this. They're not idiots. They will not want to let it go just because you want to get out of your spot Bitcoin ETF shares. Now, hear me out for a second. Technically, if you own spot Bitcoin ETF shares, those shares have to represent a corresponding purchase or amount of spot Bitcoin ETF, a spot Bitcoin in the ETF. When you sell those shares, what is technically supposed to happen is that those shares disappear, and the Bitcoin is supposed to disappear, supposed to be sold out of the ETF, right? That those shares represent. So this is cash in, share create. 1 day later, Bitcoin shows up in supposedly the exact proportion to the shares, the cash in, shares create. 1 day later, Bitcoin shows up to equal the share create. The reason why I say that's 1 day later is because the spot Bitcoin ETFs have a T+1 settlement arrangement. So it's share create plus 1 day. They have 1 day for the ETF to bring into existence the spot item to correspond with the share create. That's called T+1 settlement, right? So they got plus 1 day after the shares are created. So cash in, shares of the ETF are created. Your account gets credited right there. 1 day later, they have the spot Bitcoin ETF has 1 day to bring about the actual Bitcoin that corresponds with the shares. Now, when you sell the shares, shares disappear, but the Bitcoin is still there. They've got 1 day to eliminate that Bitcoin out of the spot Bitcoin ETF. I believe that while they are responsible for getting the spot Bitcoin out of the ETF shares, they're not getting it out back to you or back to Oliver Velez or back to anyone else in the spot market who's willing to buy and never let it go. I believe they're just going to sell it to another entity of theirs, or they're going to have enough demand from people coming in when you want to share, when you want to get out, that they will have very little reason for the Bitcoin to ever leave that ecosystem. And I believe that the growing demand for Bitcoin is going to happen over a 20-year period. And so when you want to sell your shares, they're attitude, in my opinion, is going to be like, just because Joe from Kentucky wants to sell his shares, we're not going to let this Bitcoin go. All right. John's going to pick it up from my other entity over there, or my offshore account's going to pick it up from over there, or we've got enough demand coming in for those shares to basically be kept right here and be used for the demand coming in. I just don't see with the competition for the limited supply of Bitcoin that is disappearing on OTC desks, disappearing in many ways off of centralized exchanges, them other ETFs, not only in the United States coming, but all throughout the world, China, Hong Kong, London, all other ETFs competing for this shrinking limited supply, that these spot Bitcoin ETFs are going to just let the Bitcoin go for all of those other competing entities to take it and maybe not let it go. I just don't see that. So I say all of that. I'm sorry for being so winded with that, but I say all of that, guys, to say that Bitcoin's never had a constant institutional bid buying in the market 24 hours a day, every second of its life for decade after decade after decade after decade. This, in my opinion, will have the tendency of putting in a floor underneath Bitcoin's price that it has never had. It's never had that institutional bid there waiting to just buy your panic sell. And so the nature of the way Bitcoin trades, I think in phase two is very different. And I've been saying this for a while. People have been talking about this idea of diminishing returns, but what they fail to understand is that the road looking forward is not always the same as the road behind you. And when you're dealing with something that is going through an S-curve adoption, you can't confuse the middle of the curve with, okay, it's slowing down and that's the way it's going to be forever. So let me show you what I mean by this. I think I can do this. All right, let me try this. I'm experimenting with a variety of things here, guys, just to show you here, but let's do this. All right. So I have a whiteboard here. I want to draw something for you, and I want to show you this. So the way things are adopted by humans traditionally is that they have been adopted like this slowly at first, then more dramatically, then there's a pause of some sort, like that, and like that. And that's that kind of giant S-curve adoption. That's the way things that are adopted by humans starting over here in this period of time, let's call that 100 years. Now I'm just picking a number. We're going to call this 100 years, right? And just picking a number. This could be thousands of years, whatever, but let's put 100 years. Okay. Now I want you to note two things about this is the way almost everything is adopted, guys, at least historically, whether we're talking about cars, whether we're talking about electricity, whether we're talking about commercial airplane travel, whether we're talking about, anything, radio, television, whatever, okay? Anything human beings adopt, they adopt it in this manner. But it has changed over the decades. Now, I want to show you the left-hand side of the adoption. Notice how it's flat here. It's flat with a slight upward move, and then it accelerates. That's the first thing I want you to notice. Then I want you to notice the middle of the adoption where it does tend to have a pause and taper off a bit. All right? And then there's this secondary acceleration into near full adoption. All right. And let's call near full adoption 80% of the world. Okay. Now, here's what's changed. Every decade or so, this has been smoothed out. So several things have changed to where things are not, they're adopted in a similar fashion, but not exactly the same. You see, as time has gone on, what you'll find is that this is not flat anymore. And so the adoption starts like this. So it used to have that flat part first, right? But it doesn't have the flat part first anymore. Technology speeds things up. So adoption starts rising right away. Okay. Now, you see this middle part. It doesn't, things that are adopted by humans don't have that middle pause like that. It's a lot slighter. It's a lot more gradual. So you get this. Ah, sorry about that. Let's go back. You get this. It starts to slow. And this is Bitcoin's right there. That's where people are assuming there's diminishing returns because it's tapering off temporarily. But what I believe they're failing to realize, this is phase one. In your phase two, you swoop back up like that. You see? And this part used to look like this part. It used to be deeper. It used to be longer in duration. It used to be a setback. It's not a setback anymore. The iPhone didn't have a setback. It had a slight little pause, just like this. The iPad didn't have a setback like this. It had a slight little thing. The computer, on the other hand, did have something a little closer to that. But as we progress, this middle part after phase one, right, is slighter and there's almost no flatness in the beginning. And so we're right here in Bitcoin, in my opinion, we're right there ready for this to happen next. And here is the crazy thing. This is phase one, right? And this is phase two, which I believe that we are now just starting here. Phase two. Get this, guys. Get this. Phase two is exponentially bigger than phase one. Oh, yes. Yes, that is my view, and I'm sticking to it. I don't believe that the past is bigger than the future. I believe that the next phase is going to put the past to shame. I believe that Bitcoin, you thought Bitcoin's performance, you thought what Bitcoin did during its first 15 years was spectacular and amazing. I believe you haven't. You ain't seen nothing yet, because in financial markets, if you've studied financial markets the way I've studied them, you will understand that it's the second phase that's the big one. It's not the first one. And think about it this way, guys. How can we possibly say that less than 1% of the world has adopted Bitcoin? Less than 1%. How can we say that the best is behind 1%? Does that even make sense? Think about it. Less than 1% of the world has adopted Bitcoin. So the best is behind us? Oh, we're almost at that 1% level. The best is behind us. Like the 99% up ahead of us is not better than the first 1%? Impossible. Impossible. I don't subscribe to this diminishing returns theory. I think the best years are in front of us. And when you ask me Oliver, is it too late? I'm like, you got to be freaking kidding me, right? Too late. We haven't started. Guys, what if the starting point is 1 million, 2 million, 5 million? What if that's the starting? What if this is just a freaking warm up? We're less than 1%. How can you ask me? Less than 1% of the world has. How can you ask me, is it too late? Oliver, is it too late? How? That's not how. That's like, this is not even the perfect analogy, but I'll use it. Bitcoin's 15 years old. Do you know what year Apple was 15 years old? Let me show you. I will show you. I'm going to show you what year Apple was 15 years old. It was 1995. So let's go all the way back to 1995. All right, I want to show you this. Let's do it. Let's do it now. All right. What the heck am I doing? Share screen. Okay. Boom. Okay. Now, let me make myself little so you can see the chart a little bit better. So, check this out. I'll show you this. Let's clear this. Oh, wait a minute. What am I doing? So, we're going to go all the way back. What I want to do is I want to take this back to, let's do 6 months. And let me point to, yeah, I can use this. Let's go to, as you can see, Apple goes public in 1980. Okay, so we count from the public, going public state, 15 years later is in 1995. There we are right there. Oliver, Oliver, am I too late? Am I too late to Apple? Am I too late, Oliver? That's not how things happen. You can't be late 15 years into a technological adoption phase. That's not even the freaking warm up. All right. This wasn't even the warm up for Apple in reality, 15 years late, 15 years later. All right. And remember what I told you, that all financial markets, the second leg of something is the big one. Remember that? So let me show you this. Let me show you this. How the heck do I do this? All right. Here is phase one. You understand? That's phase one right there. This is phase two of Apple's adoption. I am telling you guys, I've done this work over 4 decades for you. The second leg is the big one, big one. Repeat it. I actually want to hear, I want to see someone type this for me. Oliver, the second leg's the big one. The second phase is the big one. I don't care which one you use, leg, phase. I want to see it. I'm not talking until I see it. I want to see somebody say that. Okay, Oliver, we get it. The second move is the big one. The second leg is the big one. The second phase is the big one. Say it. Say it for me. I want to see it. I see your comments. I want to see it. I want to take a sip of my water. I'm not saying another thing until I see that. Second phase will be the big one. That's right, sir. Thank you. Thank you. Thank you. So, no, at 70,000, you're not late. At 100,000, you're not late. But I will tell you this. I will tell you this. Your time is running out. You see, the reason why you don't have a lot of time is not because of where we are in the adoption cycle. The reason that you don't have a lot of time is because the phase or the period in which we are still communicating in one full Bitcoin, is going to disappear very quickly. And I need you all to understand this. It doesn't mean that we won't still be early in the adoption phase, but what I'm talking about when I say that your window of opportunity is closing on you rapidly is the era where people refer to one Bitcoin as being normal, or how many Bitcoin do you have as being normal. That's disappearing. Guys, I'm telling you, there was a time, if you go all the way back and you read the Bitcoin forums back in 2010, do you understand? 2011, no one was speaking about one Bitcoin. It was too little. No one, you don't ever see someone saying, I got one Bitcoin. No, everyone was talking in thousands, right? I got 60,000, 40,000. I'm picking up 4,500 Bitcoin here. We'll see what it does. People were speaking in thousands because the unit value of one Bitcoin was just too small. No one would post about, I got one Bitcoin and it's a fraction of a dollar, right? Or fraction of a penny. So they spoke in thousands. Now, you can't go on forums or go on Bitcoin Twitter and see people talking about thousands every single day like it's regular. Yeah, I've got 4,600 Bitcoin and we'll see how it do. That's not spoken about anymore. We've gone from thousands to hundreds to one. You are extraordinarily lucky on planet Earth today if you have one Bitcoin. One. And I am telling you, the error where people can literally say, and you hear people regularly saying, I've got 5 Bitcoin, 4 Bitcoin, 21 Bitcoin. That's disappearing. And no one's going to be talking about one Bitcoin anymore. They'll be like, I've got a quarter of a Bitcoin. Maybe I've got a half of one. Whoa! I've got an eighth of a Bitcoin. I've got a tenth of a Bitcoin. And that period will last for a while. And then that period's going to disappear. And you know what everyone's going to be talking about? I've got several million Satoshis. Then it's going to be, I've got several thousand Satoshis. Then it's going to be, I've got several hundred Satoshis. It's happening. It's happening. I'm not speaking about something that hasn't been happening. And so even throughout that process, one can, from the global adoption phases view, over hundreds of years, maybe thousands, you can still be early, even though no one's speaking about one Bitcoin. I'm talking about the error of still being able to maybe get to a full Bitcoin. That's going away. The vast majority of people today can't have one Bitcoin. They just don't have the financial wherewithal to do that. That's the vast majority of people on Earth right now. And soon, the vast majority of people with the financial wherewithal will not be able to get one. Your time is freaking disappearing. Do you understand what I'm saying? You don't have a lot of time, guys. You don't have a lot of time. All right, guys, let's see what you got. Don't have a lot of time here. Let's see. I see your comments here. That's right. The second leg is the big one. Who am I going to pick there? Boom. That's right, Bart. Second leg's the big one. All right. I believe we're just starting that now. The Bitcoin meter is running. Oh, yeah. Oh, yeah. I think that what holds most people back is the fear of being wrong. And what they interpret as being wrong is that they buy, and then as soon as they buy, the USD denominated price of Bitcoin drops. And so there are two problems with that. Number one, it's ego based. Number one, it's ego based. But that's problem number one, trading from an ego based position where I need to make sure that I am right away from a USD dollar denominated price. And so until I can be sure of that, which you can never be, I'm not doing anything. It's an ego based attitude. All right. That's problem number one. Problem number two is a time preference problem, a time frame problem. So there's a conflict in the idea and what they really feel inside. So the idea might be that I'm going into Bitcoin and I'm not thinking about selling anytime soon. That's the idea. But what they feel inside is that if it drops as soon as I get into it, I feel like I've lost. And there's a conflict between what they really feel inside and the idea that it doesn't matter now. What matters is at the end of 2025. What matters is what Bitcoin is at the end of 2029. What matters is what Bitcoin is at the end of 2033. So that's the real attitude that they should have. Whereas that now doesn't mean anything. The attitude you should have now is down is absolutely gift time. Down is good now. Red is the best color now. With the constant institutional bid, you see how fast these Bitcoin drops, right, are being gobbled up. I don't have to explain that to you now. You see that. Let's see. Give me a second here. What am I doing here? You see that. Let me bring it up really fast here. Let's do it. Boom. You see it. Now, this is the whole life of Bitcoin right here, right? When you step back, why are you afraid of these? Why are you afraid of these? These are gifts. These are Bitcoin's bear markets. They are gifts. You should not be afraid of them when you step back. But even from a shorter term perspective, right? If you go from, you see how quickly these drops are being gobbled up right now. So you see that they're being gobbled up. They're roaring back. Like the roar back is huge off these drops. Down should be considered a gift for you. You know, these drops are roaring back with power and with force because of that constant institutional bid in the market. They're going to take your Bitcoin away from you, and they're not going to be so, it's not going to be so easy for that Bitcoin to leave that ecosystem anymore. That's the disappearing effect, this increasing scarcity effect of Bitcoin. All right. So understand this. All right. Let me see here. Platinum Rift says 2021, well, 2022. I'm not quite sure why you mentioned 2021. Maybe it was the China mining ban that caused the 50% plus drop from 64 to 28. Maybe that's why you mentioned 2021, but we roared back to new highs to 69. So maybe that's why you're saying that was a little tough. 2022 was the bear market year. And 2023, I don't see anything bearish about 2023. 2023 was a straight line to the upside with some pauses along the way. But this is just a fundamental misunderstanding. People who DCA'd properly during 2022, and I made sure all of my guys did so, we DCA'd all the way down and we got bigger and bigger toward the low. So think about this, guys. Think about this. Bitcoin has this almost mathematical certain pattern to itself. It's 3 years up, 1 year down, 3 years up, 1 year down. Let me show you this. So if we go to, if I were to show you this and we go to, right, a year, let me take these markings off, and then we're going to go to a year chart. Instead of 6 months, we're going to look at a year. And what you'll find, right, is, let's take this one away. We're going to take the first bar away. It's seeking price discovery. But what you see is, you'll see 1, 2, 3, and pause. All right. 1 year of pause, and then 1, 2, 3, and pause. 1 year of pause, and then 1, 2, 3, and pause, right? 1 year of pause. And now 1, we're in 2, there's another green there, right? If the pattern's to hold, and it will. Okay. So not understanding that there's 1 year pause, which is the year that you use to build your wealth profile for the 3-year run after. Like the idea of stepping out of the gift one, the red one, guys, this is silly. Is where you understand you're dealing with novices here, right? The red one is the preparatory one. Do you follow what I'm saying? Somebody let me know if they understand what I'm saying. That's the year to go to work. You go to work during the red one. You go to work during the pause. You build during that 1 year to build your wealth profile in the 3-year run that happens after it. You don't step out of it. This is a fundamental misunderstanding of the market, what it does, what you have, and proper market play. The down is the preparatory time. If you are relatively confident that you've got 3 ups after that, you don't try to sidestep the down. You build in the down because you only got 1. You've only got 1 year to prepare and make yourself wealthier. 1. You don't sidestep that. You build during that. And that's exactly what we did. We built during 2022. We piled in during 2022 and increasing amounts. Now, let me tell you this as well. Knowing that Bitcoin is an 80 vol asset. So knowing that it's an 80 vol asset, we use the number 80%, right? So when you start, when Bitcoin starts to get past 50, 60% down, you want to pick up your DCA because you're now closer to the bottom historically than you are to the top, right? So if Bitcoin's an 80 vol asset and on average it'll drop near 80%, if you start picking up in size and in frequency your DCA after being down 60%, there's only 20% there to go. You want to do your biggest work between 60 and 80%. And meanwhile, you got your novices that don't know anything. I'm trying to sidestep the down move. That's not what you do. That's not what professionals do. They accumulate the down and then ride the up. There's no sidestepping. These people will never have wealth because you don't make your wealth on the way up. You make your wealth on the way down. That last 60 to 80% down, you go to work. There's no sidestepping that. And so the idea that people, right, were saying, people were shorting in the first green, right? Check this out, right? They're shorting after the red is finished, not knowing that Bitcoin only gives you one. You only get one. What are you shorting on the first green for? There's 3 greens to come. You're a freaking idiot. They're still shorting. And there's 1.5 to go. Fundamental misunderstanding, no study, no investigation, no delving in, no going down the rabbit hole. You think with this type of asset, you're just going to draw some lines on a chart and find resistance and support and think that's going to work? No, no. I wouldn't go that far, microchip MD. It's not that poor people just trade. I've been a trader for 43 years. I'm far from poor. There are some extraordinarily wealthy traders. My mentor and the only hero that I can say that I really have in the trading space is Paul Tudor Jones, my mentor. And Paul Tudor Jones has done nothing with his life but trade. Multi-billionaire, and so proud of him. An early Bitcoiner, not an OG, but definitely early, meaning, in that 1,000 to 5,000 range. And even Paul Tudor Jones has realized this is so different that I can't trade it the way I've traded everything else my entire career. He's gone on record to say, I usually don't hold my horses this long, but Bitcoin's different. And anyone with trading acumen and experience in the trading space will instantly recognize how different it is and how infrequent its explosions to the upside come. So you can't trade something if you want maximum returns and something that delivers 80% of its gains over a 13 to 18 days of the year. So what a lot of people don't realize is that 80% of Bitcoin's gains annually come over a 12 to 18 random days a year. Think about this, guys. There's 365 days that Bitcoin's trading. 12 to 18 days deliver, random days, they deliver 80% of the upside move. What? If you're trading in and out, you're definitely missing some of them. Now, if you miss just a small handful of these 12 to 18, you're negative. Think about that. Bitcoin's the best performing asset on planet Earth. If you missed a few of its good 12 to 18 days, just a small number of them, you're negative? Wow. So when you understand these statistics, you understand why trading is not the vehicle to use on this asset, that massive accumulation on the red bars is the way to win. And think about this. Bitcoin has never, to this very day, failed one individual, any individual on planet Earth who's ever bought a dip. Bitcoiners, are you listening to me? Never, not one person on earth can say, Bitcoin has not delivered for me by buying a dip. Every single dip is profitable. Every single one in the history to this very day is profitable if they didn't let go. Think about that. That's extraordinarily powerful, and that will continue for a very long time in my view. Yes. Yes, accumulation DCA is the only way for busy professionals. Absolutely. And yes, very much so. I was about to launch off into something else, but maybe I shouldn't do that. That's a long talk. We'll save for a different. Yeah, and that's very true. Like my job was trading. He says most of these clowns are out here in mom's basement. That's very true. Very true. Very, very true. All right, guys. What else here? It's okay to trade as long as you're buying BTC with your earnings. Yes, BTC is the profit. And of course, as a professional trader, I can't say that I'm against trading, but I do want people to understand this. I think it's important to understand what the failure rate in the trading space is. Guys, it's 92%. 92% failure rate in my business. And it can be as high as 98%. But 92%, and listen, I'm not saying 92% here on X.com. I'm saying it's a 92% failure rate on frickin' Wall Street. In the professional arena, it's a 92% failure rate. 8% of all people who try this professionally, only 8% will ever be able to do it. That's what the statistics show. And we're talking about the financial arena, guys. So when I come into your world, it's like 98, 99%. Wall Street is a filtering mechanism. Do you understand? They drop 100 people in to get their 8. They eliminate the 92 and keep the 8. Then they drop another 100 through the funnel. And at the bottom, the 8 falls out. Boom, you stay. The 92 are gone. And it's a constant filtering process. That's all it is. You're in search for your 8%. You know the vast majority are going to be duds, right? And you're just constantly filtering for your 8%. That's what Wall Street does. That's what the professional arena did. That's what I did for decades with my trading operation. I filtered for the 8, but I let everyone know up front, it's a 92% failure rate. The odds are against you. You're likely to fail. Now, if you want to face that and deal with that, and you think you have what it takes to be the 8%, by all means, give it a shot. But I never allowed someone to step in the game not knowing what they're up against. And so, yeah, if you don't have proper training, if you don't have proper guidance, if you're out here just, I read an article, I read a book, I watched a YouTube video, and you think you're going to pit yourself against some of the brightest minds on planet Earth with billions of dollars sloshing around this market, that they're going to allow you just because you watched a YouTube video, they're going to allow you to come into their world and take food off of their table? Really? You think it's like that? You think that's the way it works? No, buddy. All you're going to do is be a depositor. There are 2 types of traders in this world, right? There are those who deposit and never withdraw. And then there are those who withdraw and never deposit. And the smaller group are those that just withdraw. Now, the withdrawals that go to the market and withdraw money out of it, they need you constant depositors to live their life. You understand? A true professional doesn't deposit ever. Maybe in the beginning, but as a professional, there's no deposits. Do you understand? I haven't made a deposit in the market since 1992. There's no depositing by a professional. There's only withdrawing by professionals. You deposit. And we need your deposits to have to sustain our perpetual withdrawing. And the game is designed for 90+% of all people must deposit, because the withdrawals, they don't withdraw like this. I'll take a little bit of that. And a little bit of that. No, they withdraw. Do you understand? They withdraw. They withdraw big. So we need massive depositors who are just going to take their money and dump it in the market. For me, that's the way the game works, guys. So when you say it's okay to trade and make your profits Bitcoin, this is assuming that you're one of the 8%. Because if you're not, it's not okay to trade. Most people should not be trading, guys. Period. You should be accumulating Bitcoin. The game is that simple. You don't have to trade today. There is no need to trade. And I'm in the trading space. Most of you should not be trading, period. You shouldn't be doing it, because all you're going to wind up doing, most of you, I've got the stats, 92 to 98% of you are just going to deposit for someone else to take the money. And that money could be that you're depositing, that could be generational wealth over time. If you DCA that, or even lump sum that money that you were intending to trade on, if you lump sum that into Bitcoin, your future's almost guaranteed. But you're going to keep it in your freaking trading account as a deposit for someone else to take. 92 to 98% of you are going to do that. Now, I know some of you might consider it strange that a trading professional is telling you don't trade. I'm telling you, don't trade. That is what I'm telling you. Accumulate Bitcoin, and you're way better off. All right. There you go. Sorry if that burst your bubble. I'm sorry, but dude, Michael Chip MD, I can't get away from your comments here. Not that I want to, but like, I do want to give some others an opportunity. See what you say here. Love the oh yeah, this is these are New York photos, guys. I'm a New Yorker. I was born and raised in Brooklyn. Well, at least a portion of my childhood. But these are photos of Brooklyn in the back. And this is a painting of my horses. If you can see here. Anyway, and these are roses, which I always have. Let's see here. What are the differences between companies like I Trust Capital, Bitcoin IRAs versus ETFs? Well, you can hold ETFs in your IRAs are obviously, they're retirement vehicles, right? They're tax advantaged retirement vehicles. And inside, an ETF is a wrapped Bitcoin product in the form of a registered security. So that's very different. So your IRA, which is a vehicle, can hold the ETFs. Okay. Now, as one of its registered securities, and of course, in that tax advantaged vehicle, you don't have to worry about capital gains until you start to withdraw after retirement. I do believe, let me speak about this, guys. But wait a minute. So Bitcoin IRAs can be different. There are some Bitcoin IRA programs that do allow you to self-custody your Bitcoin. You are in control of your own spot Bitcoin. You have Bitcoin itself, not a wrapped financial product, but the actual Bitcoin, and it can still count as an asset in your IRA. And so Swan Bitcoin, I believe, doesn't offer that, but perhaps Unchained Capital does, and Kingdom, and a variety of others. So you just have to give these companies a call and find out what the differences are. But when it comes to retirement, I will say this. What I encourage my guys who have Bitcoin in their retirement plans, and they're accumulating Bitcoin in their retirement vehicles, their 401ks, their IRAs, that's not the only thing you should be doing. Yes, you should be maxing out your retirement. You should be maxing out that tax advantaged vehicle, but you shouldn't make that the only stack you have in Bitcoin. You need in a stack outside of a structured entity that is under the thumb of control. And the only Bitcoin that you have that is outside of the control of anyone is your own self-custody Bitcoin. Now, a lot of people take my comments regarding the spot Bitcoin ETFs and self-custody Bitcoin as me being not pro ETFs. Oh, that is very wrong. I am very pro spot Bitcoin ETFs. I think they're an amazing catalyst for Bitcoin. Everyone's coming to Bitcoin at the end of the day. So for me to say, oh, I don't want them to come when everyone's coming is just stupid and silly. Wall Street is a part of the world. The whole world is coming to Bitcoin. And that is not a bad thing. That is just a natural adoption of Bitcoin. Everyone's coming. Everyone. And Bitcoin, I mean, Wall Street is part of everyone. So it's not a bad thing. But what I'm really careful about people understanding, guys, is that one of the main purposes of Bitcoin is to be free from a failing system. And self-custody Bitcoin is outside of the system. You seek zero permission from another human being to access it, to move it, to send it, to travel with it. You are completely outside of the world. You are in the world, you're not of the world with self-custody Bitcoin. You are free from everything with self-custody Bitcoin. You don't have another man in your affairs with self-custody Bitcoin. Now, I'm not saying you can't diversify and have some self-custody Bitcoin and have some spot Bitcoin ETFs. I'm good with that. But I would rather err on the side of really pounding the table on self-custody Bitcoin, because we've always had financial products that I need permission from another man to access, to cash out of. You know, they don't operate on the weekend because they don't want it to operate on the weekend. And we've had that before. There's nothing new about that. The new thing is freedom, because we've never had freedom. And self-custody Bitcoin is your freedom. And you can't forego that just because Wall Street's making a paper version that's more convenient for you. But Oliver, it's easier. Who cares if it's easier? It's not freedom. So let's get it straight. It's okay to have some of it, but it should not be the majority. The majority should be freedom. The majority should be in something that gives you total autonomy. The majority should be something outside of a system that's collapsing and failing. And no one in their right mind will tell you the system's not failing. No one. All we need look at it as $1 trillion in debt increasing every 100 days. We're increasing debt by $1 trillion every 100 days. That's not failing. And the dollar's lost 99.8% of its purchasing power since 1913. That's not freaking failing. Come on. You want to stay in that, or do you want some escape hatch outside of it? And the only thing we have is self-custody Bitcoin. And so I'm careful when, even though I know they're good and you can have some of that, and that's cool, I'm careful to swing my comments too much there, because I know a lot of people listen to what I have to say. And I would rather err on the side, no self-custody. You want to be able to get on a plane and go anywhere in the world and your wealth never leave you. You want to be in a position where not a single human being can touch what you have, ever. You want to have something that you don't need another man in between you and your thing. You need to have something that you don't have to seek permission to, like you're a freaking slave. Masa, can I withdraw? No, $500 a day. You can't withdraw more than that. You need something outside of that. Do you understand? Can I have access to this money? No, it's 4 o'clock. It's 4 o'clock on Friday. You got to come back on Monday. We need something outside of that. Can I travel with this amount of money? I'm going to Europe. If it's over 10,000, no. We need something outside of that. And that's the only thing is self-custody Bitcoin. So diversify if you like. You like the bells and whistles that are going to come on the wrapped paper Bitcoin? That's fine. I like them too. I'm going to use options on them. I'm going to use them. But I'm going to have the vast majority outside of all of that bullshit. All right. Hope I made myself clear. That is right. That is right, Kiet. I'm glad you listened to that. I'm glad you like it, actually. I'm glad you like that message. But Oliver, it's more convenient. Self-custody is hard, Oliver. It's hard. So what? So what? You know, my dad used to say, Oliver, if you want your future to be easy, do the hard thing now. That's what he used to tell me. If you want tomorrow to be easy, do the hard thing now. He didn't stop there. He says, but I'll tell you this. If you want your future to be hard, do the easy thing now. Opt for what's easier now, and your future's guaranteed to be really hard. Opt for what's more convenient now, and your future will be the hardest life you could ever possibly imagine. So which one do you want to do, Oliver? He says, Dad, I want to bite the bullet now. There you go, boy. That's what my father used to teach me. Do the hard thing now. Convenience is a trap. Do you understand that? It's a freaking trap. Do the hard thing now. Do the slightly more complex thing now so that tomorrow is easy for you. Do the easy, really, the thing with the flashy lights, and it's easier and it's cheaper and it's easier and it's more convenient. It's usually a trap, guys. All right. All right, guys. There you go. Yes, Medellin, Colombia. All right, guys. I just wanted to pop on in. I've been going for an hour. I just wanted to do an hour today. Love you guys to death. I'm loving the fact that I can see your comments. I love this. I love this. All right. Thank you very much. Thank you for joining. How many people here? 1,400 people. Wow. Wow. All right. I'm moving out of the realm of being a freaking nobody. Nobody. You ever notice how I got a question before I leave. Notice how Jamie Dimon, what does that sound? My chef is cooking something. Jamie Dimon, you notice how he always sounds like a New York gangster? Jamie Dimon, what do you think about Bitcoin? As far as I can say, it's a trumped up fraud. It's a trumped up fraud. Bitcoin's a trumped up fraud. It's for criminals. It's a trumped up fraud. I'm from New York, man. I know those types, man. Why does everybody on Wall Street sound like that? They almost all do, guys, believe it or not. It's a trumped up fraud. Bitcoin's a trumped up fraud. All right, guys, look, I'll see you on the next live. All right. I'll try to schedule some of these so you have some advance notice. But thank you guys for coming. I appreciate it. I know the only thing scarcer on planet Earth is your time. There's Bitcoin and your time. And Bitcoin is actually time, which is crazy. And I know you could be doing a lot of things with your time right now. I appreciate you spending it